The earliest banks trusted handwritten records. Every transaction depended on human honesty, but criminals studied weaknesses very carefully. They watched bankers writing ledgers daily. They realized numbers could be manipulated easily. No alarms, no cameras back then. Just blind trust in decorated officials, a perfect playground for early fraudsters. The first major banking scam emerged quietly. No guns, no violence involved, just clever manipulation of paper records. Criminals understood psychology extremely well. They knew bankers trusted familiar faces, so fraudsters forged signatures confidently. Forgers copied handwriting with shocking accuracy. Some practiced for months secretly. They learned every stroke and curve. Imagine doing homework for crime seriously. Banks had no way to verify authenticity. Documents looked legitimate on the surface. Clerks approved transactions without hesitation. This created massive hidden vulnerabilities. Criminals requested duplicate withdrawal slips. They altered amounts behind closed doors. They walked away with stolen wealth and bank staff didn't notice anything. Fraud slowly drained funds unnoticed. Customers blamed banks for missing money. Managers searched for internal mistakes helplessly. But real criminals stayed far outside. This exposed the first banking security flaw. Trust was used as a weapon. Fraud spread across multiple early banks. Some institutions collapsed under pressure. People panicked and withdrew savings instantly. The financial system became dangerously unstable. Fear spread faster than actual fraud. Governments realized disaster approaching quickly. They introduced strict verification processes. But criminals were already adapting. They forged new seals and stamps. They created fake official approvals. They mimicked treasury documents flawlessly. Bankers struggled to identify authentic papers. Imagine every paper feeling suspicious suddenly. This uncertainty created chaos inside banks. Criminals escalated their strategies further. They bribed low-level staff silently. Insiders provided access to confidential ledgers. Information became the most powerful weapon. Banks weren't prepared for inside threats. Trust again became their biggest weakness. Fraud evolved faster than bank protection. This pattern still continues today, interestingly. Early fraudsters realized something important. Math errors never looked suspicious, so they changed small numbers strategically. Tiny adjustments created huge long-term theft. This became the first accounting manipulation, later known as classic ledger fraud. Banks barely survived these early attacks. Financial oversight was extremely limited then. Criminals took full advantage of loopholes. Scams started becoming organized operations. Some fraud groups planned like businesses. They targeted multiple banks systematically. Unexpectedly, banks had no countermeasures. Technology didn't exist to fight manipulation. Fraud grew silently behind closed books. And no one could predict the scale. The world's first major banking scam unfolded rapidly. A perfect storm of trust and opportunity. Banks realized the danger too late. Their vulnerabilities were deeply rooted historically. This was only the beginning, unfortunately. Banks started introducing basic verification systems. But fraudsters quickly adapted their methods. They forged signatures with astonishing precision. Some copied bank seals flawlessly. Employees unknowingly approved fraudulent transactions. Millions of dollars disappeared without notice. Auditors struggled to find discrepancies manually. Errors were hidden inside complex ledgers. Criminals exploited gaps in bookkeeping expertly. Some schemes involved multiple accomplices secretly. Each member performed a precise specific task. Clerks, messengers, accountants all had roles. Operations resembled modern organized crime groups. Trust alone became extremely dangerous quickly. Banks realized human oversight was insufficient. Internal policies were updated urgently. But fraudsters always found new weaknesses. They disguised themselves as auditors occasionally. Even inspections became opportunities for theft. Money flowed through invisible pathways cleverly. Everything looked normal externally to outsiders. Yet chaos spread inside bank ledgers. Customers slowly noticed missing balances occasionally. Banks couldn't explain the sudden shortages. Fear spread through communities rapidly. Some banks temporarily suspended customer withdrawals. This triggered the first government investigations. Authorities had to study banking methods. They realized criminal expertise was required. Arrests alone could not stop schemes. Early regulations targeted only direct theft. Creative manipulations remained legally unpunished initially. Loopholes encouraged increasingly sophisticated fraud techniques. Double verification processes were introduced systematically. 2 independent staff approvals became mandatory. Criminals started targeting weaker banks intentionally. Risk became uneven across different institutions. Pattern interrupt. Sounds like modern cybercrime, yet everything was purely paper-based then. Fraudsters continued operating without leaving evidence. Audits became more detailed and frequent. Banks hired external accountants for verification. Some fraud schemes lasted months undetected. Each loophole learned by criminals quickly. Public confidence in banks dropped sharply. People feared losing their life savings. Insurance and legal reforms slowly followed. Fraud became a driving force for banking reform. Banks understood insider threats could destroy systems. The industry evolved cautiously after this disaster. Criminals were creative, relentless, and highly organized. Lessons from the first fraud shaped global banking. The foundation of modern banking security was born. Banks started investing in advanced security measures, alarms, locks, and later surveillance cameras appeared. Criminals adapted again using clever new methods. They bribed insiders and disguised their intentions. Some used fake documents during audits cleverly. Even trusted staff sometimes became secret accomplices. Every loophole was exploited by these fraudsters. Banks realized technology must replace blind trust. Paper ledgers were no longer enough. Early mechanical counters and vaults were installed. Fraudsters now had to fight smarter defenses. Pattern interrupt. Sounds like a thriller scene. Customers demanded protection for their savings. Banks hired auditors with specialized skills. Internal checks became stricter and more frequent. Criminals innovated faster than controls could follow. Some used psychological manipulation against bank staff. Banks gradually learned to monitor employee behavior. Transactions now required multiple approvals simultaneously. The rise of accounting software helped prevent mistakes. Criminals moved toward more sophisticated methods digitally. Eventually, fraud inspired modern cybersecurity systems. AI today predicts fraud before it occurs. Banks combine technology with human intelligence strategically. Every suspicious transaction is flagged instantly now. Fraudsters fear adaptive AI more than humans. Pattern interrupt. Imagine losing millions unseen instantly. The first scam taught banks crucial lessons. Internal controls, audits, and employee monitoring emerged. Without lessons learned, entire economies could collapse. Fraudsters' creativity shaped the evolution of security. Even now, banks remain vigilant constantly. Technology alone cannot stop human ingenuity entirely. Every generation of fraud inspires new protections, from paper manipulation to AI-powered defenses. The story of bank fraud remains endlessly fascinating. Fear and excitement drove innovation continuously. Audiences must understand the hidden financial risks. Educate yourself about history to prevent surprises. Your money is only safe with awareness. Stay alert. Question strange requests immediately. Subscribe now for more crime history stories. Hit the bell icon for latest updates. Comment below your thoughts on bank fraud.